Hello, my name is Samrat and I'm back with my second video. And today I woke up and I looked at my portfolio. And I was thinking last year in October my portfolio was at, let's say, 100 rupees, and today it is at 85, 90 rupees. And I don't have any income right now. In the last 1 year I was studying, so I did not add any money into the market. Whatever I had, that's all I had. And I was thinking, why is my portfolio not at its all-time high, especially when Nifty is touching its all-time high? And I know many people are scared right now that mutual funds have recovered, Nifty has recovered, but my portfolio has not recovered. And I know it's a concern because I was talking to my dad, and even he was concerned why his stocks have not gone up. But he told me that, beta, agar you had put my money in mutual funds, no, look at this mutual fund Parag Parikh, look at this mutual fund Motilal mutual fund, they have already gone to its all-time high, so we should put all our money in mutual funds, leave stocks. But here is what I would like to tell to all the people who are in this situation. See, there are three scenarios that can play out. Now you have to see which scenario fits you. And I thought about it a lot, and these are the only three scenarios that exist. Number one, the stocks that you bought are not good companies. The stocks that you bought, you don't know about the business itself. For example, let's say there is a company called ABC. Now, if you don't know what ABC does and you own the stock of ABC, why do you do it? Because you might listen to someone recommend the stock to you, you might listen to some YouTuber or someone coming up and saying the company is good, but that guy might change his mind after 3 months and sell it off. He won't tell you he sold it off. He doesn't have any obligation to tell you he sold it off. So the first reason is the companies in your portfolio are not good, which could be a general case. And I think even if you can wait for a bull market to sell your positions, like there's nothing wrong in waiting for a bull market, because in bull market everything goes up. And right now there is no bull market. This is not a bull market. Even though Nifty has recovered, the bull market is yet to come. Every 3-4 years, every 5 years, there is 1 year when Nifty just outperforms. We don't know what Nifty will do. Nifty might go to 28, 29, 30,000 in this year itself, in the next 1 year. I'm making this video in November 2025. So in the next year, it could go to 30K. Maybe downside is limited. So maybe it stays here 26, 27 and then spends more time here. And then 2028 is a bumper year, or maybe 2029 is a bumper year. But there has to be a bumper year. And there is limited downside. Because I have learned one thing after reading all these books, that markets will only crash after a euphoria happens. And right now there is no euphoria. There is no euphoria. Nifty has given zero return in the last 12 months. There is no euphoric rise. So Nifty is not going to crash. So first of all, calm down. First of all, be happy. Even if the companies in your portfolio are wrong, in the future, they will recover and they'll be fine. And you will have time to sell them. That's the main thing. Let's come to the second point. Second point is, companies might be good, but the stock is not performing. Why? For example, I'll tell you some names. Disclaimer, I'm not SEBI registered. I'm still studying for my exam and I'll probably clear it in 6 months. And so there's a company that it's in my portfolio called Prakash Pipes. The promoter increased his stake like 3-4 quarters ago. The company has a decent brand value in places like Punjab and Uttar Pradesh. The clientele is good. The clientele is premier. The clientele is all top companies in FMCG. They have done capex. They are going to increase their production. The profits are okay. I mean, they're not operating at their best, but it's fine. Most pipe companies are not, and it's a growing segment. Housing in India is going to grow. The stock is probably down, I don't know, 60%. I bought it, let's say, at 100, it went to 500, now it's at 250, something like that. And I'm like, it has down 60%, there's nothing wrong with the company. I will just wait it out. It's not my fault. Because there are not enough DIIs, there are not enough FIIs in the company. Because in the end, they control the market. They are the ones who make a stock go up. And if a company has institutional ownership, only then you can expect it to go up and down with the indices that you are tracking. Or the companies in the index, and then only you can think that the company will go up and down along with the market. But a company that is nowhere, it's a small cap company which 80% of stocks are, then your stock companies are going to perform differently. And let us say it's not a fact, but let's say Prakash Pipes doesn't do anything for a year and then all of a sudden it just triples in a year. I'm done. I'm okay. I bought it at 100, it went to 500, and I waited 3 years, and then it went to 750. I'm done. So the second mistake is that your companies are not in any index. It's fine. Nifty can go up 1,000 points someday and your stock just doubles. It's possible, very easily possible. It takes 2-3 circuits of 20% and you're done. It will go up 20, 20, 10 and you're done. It's up 60, 70%. The third thing is the fundamentals have gone bad and you have to cut your stake. And then you should cut it fast. Then no bull market will save you. If the company's revenues are declining, market share is declining, operating efficiency is declining, promoter is selling his stake, I think that's the worst sign ever. If a promoter sells his own company, then it's not a good company, 110%. I'm not saying for all the companies, but usually you come to know the reason. If a small company, 300 crore market cap, promoter owns 60% stake, all of a sudden it's 50%, it's not a good sign. Yes, a big company, for example, I heard someone saying in Varun Beverages, promoter sold his stake. That we have to understand the reason. Or if Radhakishan ji sells his stake to buy a home, he sells his stock in DMart to buy a home in Bombay, we come to know, okay, the company has done too well, he has to have some liquidity and all. But for any small company to do that, it's not a good sign. So maybe that's one of the metric I use. And everyone has to develop their own metrics, their own data-driven decisions that they have to make. So if a company's fundamentals are going bad, you have to sell it off right now, even if it is a 30% loss. Because in the future, it may not participate in the bull market. And there are many such stocks like that. And there are many such stocks available today where you do research, you know the company, it will double in next 3-4 years. It has to. Nobody can stop a stock from doubling if you buy it at a correct valuation and the profits double. Because in the end, there is only one formula. Stock price is equal to EPS into PE. If the PE is fair and the EPS doubles, you have a doubler. If the PE is low and the profit doubles, you have a multi-bagger. There is no other formula to finding a multi-bagger. And if you buy a stock at a P of 60 and expect the P to go up to 100, it may not happen. The P might fall to 40 and you face a 50% loss and you will say profits did not go down because you paid the wrong price. And someday in the future, I will read about how we know what's the right PE of a stock, and we will make a video on that as well. And that's all for today. Thank you so much. See you soon. And if you have any advice for me, anything that you want me to know, let me know in the comments. Thank you so much and Jai Hind.